11 dividend stocks that will perform in any market. For many investors, dividend investing has long been seen as a reliable way to generate income and achieve long-term capital growth. However, in light of recent market conditions, some investors are questioning whether this strategy is still viable. Stock indexes have suffered major declines in recent months, and dividend yields have come under significant pressure. While it is true that dividend investing carries more risk in a down market, there are still reasons to believe that it can be a successful strategy. For one thing, companies that pay dividends tend to be more stable and less likely to experience sharp declines in share prices. Additionally, dividend payments can provide a valuable source of income during periods of market volatility. As such, dividend investing can still be a viable option for investors who are willing to take on a bit more risk. Here are 11 dividend stocks that should be part of your portfolio no matter the market conditions. Number 1. Cintas, ticker CTAS. Cintas, ticker CTAS, is best known for its corporate uniforms, but it also provides maintenance supplies, tile and carpet cleaning services, and compliance training. As a result, some investors view it as a bet on employment growth, and it tends to rise ahead of any increase in hiring during a recovery. In the past, CTAS has performed admirably as a proxy for employment. Cintas is a stalwart when it comes to being one of the finest dividend stocks, regardless of how the job market is performing. Since going public in 1983, the company has increased its payment every year. However, until this year, those were annual payouts. The corporation shifted to quarterly payouts this year. CTAS most recently increased its quarterly dividend by 26.7% to 95 cents per share in July 2021. Cintas has also raised its annual dividend for the past 38 years. Number 2. Aflac, ticker AFL. Aflac, ticker AFL, is a supplement insurance firm with roots dating back to 1955 that offers a variety of workplace benefits, including accident, short-term disability, and life insurance. Despite the fact that the COVID-19 pandemic wreaked havoc on the insurance industry, AFL shares recovered to pre-crash levels by early 2021, aided by the market's faith in the company's payout. The confidence is well-founded thanks to a conservative payout ratio and nearly 4 decades of dividend growth. Aflac recently increased its dividend in November 2021, increasing it by 21.2% to 40 cents per share. Aflac has increased its dividend for 40 years in a row. Number 3. SherwinWilliams, ticker SHW. SherwinWilliams, ticker SHW, is one of the world's major paint, coatings, and home improvement companies thanks to its 2017 acquisition of Valspar. Sherwin-Williams' consistent and expanding dividend stream is reassuring to income investors. Since 1979, SHW has increased its distribution every year. The most recent increase was in February 2022, when the quarterly payout was increased by 9.1% to 60 cents per share. SHW's dividend has grown at a 469% annualized rate over the last 20 years. Sherwin-Williams has also increased its dividend for 43 straight years. Number 4. Medtronic Inc., ticker MDT. Medtronic, ticker MDT, one of the world's largest medical device manufacturers, is a cash cow. MDT just increased their quarterly dividend by 8.6% to 63 cents per share in May 2021. According to a Medtronic spokesperson, the company's dividend per share has increased by 47% in the last half-decade and has grown at a 16% compounded annual growth rate over the last 44 years. Because its drugs are so widely used, MDT can return large amounts of income to shareholders. It has almost 47,000 patents covering anything from diabetic insulin pumps to stents used by heart surgeons. If you look around a hospital or doctor's office in the United States or more than 160 other countries, you're likely to see its products. Medtronic has also increased its dividend for 44 straight years. Number 5. Automatic Data Processing, ticker ADP. Automatic Data Processing, ticker ADP, is the world's largest payroll processing company, responsible for paying nearly 40 million employees and serving more than 920,000 clients across 140 countries. One of ADP's greatest benefits in both good and poor economic times is its stickiness. After all, switching payroll service providers is difficult and costly for corporate customers. This competitive edge aids in generating constant revenue and cash flow. As a result, ADP has established itself as a reliable dividend payer, increasing its payout every year since 1975. In November 2021, ADP increased its quarterly dividend by 11.8% to $1.04 per share, marking the company's most recent dividend increase. The 5-year annualized dividend growth rate for the corporation is 83%. ADP has achieved 47 consecutive years of dividend increases. Number 6. Nucor, ticker NUE. Nucor, ticker NUE, is the largest steelmaker in the United States, but it's perhaps better known for its near unrivaled dedication to dividend growth. Nucor has increased its dividend for 49 consecutive years, or every year since it began paying dividends in 1973, making it one of the finest dividend stocks. The most recent rise occurred in December 2021, when Nucor increased its quarterly distribution by more than 23% to 50 cents per share. During the first 11 months of 2021, Nucor returned almost $3.53 billion to shareholders through share repurchases and dividend payments. Nucor has had 49 consecutive dividend increases. Number 7. KimberlyClark, ticker KMB. Huggies diapers, Scott paper towels, and Kleenex tissues are among Kimberly-Clark's well-known brands. Kimberly-Clark, like other consumer staple companies, promises to produce gradual but steady growth as well as a solid dividend to boost overall returns. Kimberly-Clark has paid a dividend for 84 years and has increased its annual distribution for 49 years in a row. The board of directors approved a 1.8% increase in the quarterly dividend to $1.16 per share in January 2022. For the year ending December 31, 2021, KMB earned $1.3 billion in leveraged free cash flow, after giving out $1.5 billion in dividends, that is. Number 8. Abbott Laboratories, ticker ABT. Abbott Laboratories, ticker ABT, produces a wide range of medical products. Branded generic pharmaceuticals, medical devices, nutrition, and diagnostic goods are among the company's offerings. Similac newborn formula, Glucerna diabetic management medicines, and iStat diagnostic devices are some of the company's most well-known products. Abbott Laboratories was founded in 1888. It has been paying dividends since 1924, and its dividend increase streak has lasted for 50 years. The most recent rise was a 4.4% increase to 47 cents per share quarterly in December 2021. Number 9. Illinois Toolworks, ticker ITW. Illinois Toolworks, ticker ITW, was founded in 1912 and manufactures construction tools, vehicle parts, restaurant equipment, and other items. While ITW distributes a variety of items under its own name, the company also owns Foster Refrigerators, Acme Packaging Systems, and the Wolf Range Company. Illinois Toolworks increased its quarterly dividend by 7% to $1.22 per share in August 2021, extending its 50-year streak of annual increases. However, as noted by the company, if you exclude a period of government control in 1971, the corporation claims that the streak would be 58 years long. In any case, ITW's dividend has grown at a 240% annualized rate over the last 10 years. Number 10. Leggett Platt, ticker LEG. Leggett Platt, ticker LEG, produces steel wire, designs and manufactures automotive seating support systems, and makes components for upholstered furniture, mattresses, and other home goods producers. LEG is an elite company as a long-term dividend machine. Despite not being particularly well known, Leggett & Platt is one of the S&P 500's few dividend kings, having increased its dividend for more than half a century. The most recent increase came in May 2022, when the board increased the quarterly payout by 4.8% to 44 cents per share. LEG has increased its dividend for 51 straight years. Number 11. Cisco, ticker SYY. Cisco, ticker SYY, is the food services and supply behemoth it is today because of years of acquisitions. During the pandemic, the company's size came in handy when it had to deal with the closure of restaurants, bars, and other food service establishments. Fortunately for shareholders, the unexpected and sharp decline did not prevent SYY from raising its dividend for the 53rd year in a row. In April 2022, the firm increased its quarterly dividend by 4.3% to 49 cents per share. So there you have it, 11 dividend stocks that should help your portfolio generate income during steady, great, or fair market conditions, or even when it seems all hell is breaking loose. In general, dividend investing, even in a bear market, can still be a good idea if done carefully. However, it is important to keep an eye on overall market conditions and be prepared to adjust your portfolio accordingly. For example, if stock prices are expected to continue falling, you may want to consider selling some of your dividend-paying stocks and reinvesting the proceeds into other investments. Of course, there is no one-size-fits-all answer when it comes to investing. Ultimately, it's up to you to decide what's best for your individual circumstances. However, by carefully considering all of your options and remaining diversified, you can help minimize your risk and maximize your potential for success in any market. Do you have a dividend stock that you believe will crush it no matter what the market is doing? We'd love to hear about it. Let us know in the comments below.